All right, here we go. So this is the Tuesday after a long weekend. Happy Memorial Day, or belated Memorial Day to everyone and anyone watching. Um, this is kind of funny because over the long weekend we had a couple of short sessions, and I made profit without even really trying or without really even knowing about it until this morning. I don't think I had any orders going into the weekend, and I didn't really look for any entry points over over the shortened sessions on the Sunday night and the Monday shortened session. I guess technically that's one session, but it spans over 2 days, at least on the East Coast, New York City, my time. So for me, if that's two separate days, but one separate session, it's short, and during that session, I made profit. Now, if I were to have been active, then it would have been kind of an obvious entry point. So what would happen was we had the weekend open gap up. I made sure that these candles were actually correct before I initiated the stream here, and what we had was this gapped up, and it actually entered me into a short at the 250. The reason for the short at the 250, I was playing this, I believe I streamed about it last week. I think on the hourly, it's the most obvious. It's this area right here. Maybe it's not as quite as obvious as I want it to be over there. Um, does it look better on the 2 hour, on the 4 hour? A little drop, base, drop. This crazy wiki candle is a little bit concerning, so it's not the best area, but you still have the drop, base, drop. Two uncertainty candles does followed by a big, strong leg out in either direction. Um, does indicate that there still might be an imbalance of orders left over there. The wiki top and bottom, the large range of this candle right here in this picture does indicate that if we look at a smaller time frame, there was a lot of movement. So you could look at that and interpret that as a lot of orders been like we're gobbled up there, and you can see that right here, especially with this candle. I'm not sure if this was a news candle or not, but anyway, point is, for me, it was good enough to take a shot at it because I didn't have any other shots. So it's that balance of, for me personally, trading. Am I going to take, how many shots am I going to leave out there to potentially uh, get in and potentially lose or win, right? There's only two possible outcomes. Now, it's that balance of how many traps am I leaving out there. If I leave out zero and I don't do anything, you miss 100% of the shots you don't take, right? And then if I put out too many and there's some kind of news event that happens that makes the market go in an extreme direction really quickly, that and it's against mine. I have had that happen before, where like a severe drop because of news just slices through three quote unquote traps that I've laid out. So it's really a matter of a balance. I don't really ever want to expose myself with more than three, and we've already had ex- instances where I get sliced through immediately, like no chance, just three orders back to back within a matter of 15 minutes, just destroyed, and that always feels really bad, feels really crappy. But that's, to me, that's still better than putting out nothing, because that's stagnant. And even if you lose, you can only steer a car once it's moving, even if you're moving in the wrong direction. So um, that was kind of the philosophy of what I didn't have anything, so I thought, you know what, this is as good as an area that I can just leave an order and hopefully this will work out. And in this case, it did. If I was going to be more active, I would have seen that, okay, this gap up, um, first of all, it's a gap. So there's strategies associated with trading the gap, which means you could have probably scalped some of it or aside here. Like this is very normal expected behavior off of a gap for the gap to fill and then bounce and then whatever happens afterwards. But the other piece of it that's more relevant to the quarter strategy that I employ is the fact that there's divergence. That the fact that even though it opened up and to a new high, it could not make a new high on the RSI. Now you can make the argument if you were to only look at this high and this high from the RSI that it's because of the gap. So the calculation is going to be biased. Yes, you could make that argument. But you can also continue to make the argument, okay, I'm going to ignore this high because it was a gap up. What I'm going to do is I'm going to make I'm going to compare it to the next high, which is this. I mean, and it still works. You see a steady downward momentum of the highs in the RSI. Now, I would have, if I were to have only looked at that and been extra conservative during one of these lower volume, half day sessions, I would not have had a chance to take the 250. I would have had to take the 175 somewhere. I see this, I see this bounce, I see the bullish engulfing on the 30-minute and be like, okay, you know what? If it comes back and tests this area, I will take it. So in other words, if it comes back and tests the 200 even, technically, if you want to be really specific. But for me, that's, I only enter on the quarters, so that it would be, the 175 would have been good enough. And probably I may have put in a backup order as well, just because. But the 175 would have worked as well. The 250 would have cleared. You would have gone down to 925, no problem. After today's session, it didn't occur until today, I don't believe. Yeah, it didn't occur until today. Right, exactly. So, it's nice to have these overnight, or this is why I don't really fear weekend trading or anything like that, because of the nature of the risk that we take at any given moment is so small, and the reward is always many times greater, that like I'm not in fear of the holding through news, holding through weekends and holidays and stuff. And I think, to me, mentally, that's way better than being this very high risk, high leverage scalper that needs to pay attention to all market conditions at all times, because any surprise could just blow your account, because that's how banks fail. That's I'm oversimplifying it, but that is kind of the fundamental principle of why institutions fail. And so if you want to put that into practice, okay, go right ahead, I guess. But for me, it's not. I'm not trying to do stuff that brings down institutions. It's my personal opinion. We had this, I don't know what this candle is, very interesting candle, but that was also a potential entry point for. Actually, no, technically no. I'm just trying to rationalize if there were any other entry points. What this does, with what this candle does represent, though, is that you have a bullish engulfing, or a new low movement, and if you were to do a Fibonacci retracement on the 30-minute, which I don't do, but it is valid. People do that. That is something that would have got you in. I don't know what quarter you would get in, though, so it's just one of those things that we've talked about. Previous resistance, or support rather, becomes new resistance right here with this entry candle right here. I think that was the opening of the market. If I'm not, yes, that's the opening candle of the market. That's why. So you got a very uncertain day. I almost put in an order last week to take the 30,000 to push it back up, but I didn't do that, knowing that fundamentally there was still a bearish bias. Now, we did get some news about some progression on the debt ceiling talks and everything. So I'm not sure why this isn't more of a bull market than, or like a more of a rally for the day than it is right now. But hey, you know what? I'm not really a news trader. That's not really what I trade what I see, not what not the rumors um, of what to expect and what things should be. I think that's one of the biggest dangerous moves, is to trade based on what you think should be. I think that's one of the biggest traps. So I trade what I see, and I saw a divergence, or I saw an opportunity for a zone to take, and then the divergence played out afterwards. I didn't quite see it, so I played it and hit this target just fine. Let's see. What am I doing next? Well, if I get a new low here, I'm going to set that, and the RSI continues to push up, I'm going to consider taking a long. Maybe I might even consider doing it right now, because you're kind of seeing it at the moment. You do see I did get a little bit of a yeah. So on the 15-minute, I am seeing a little bit of divergence, bullish divergence, to push this market back up. So I am kind of interested. I will, if it breaks this high, I will also take a look at maybe going long. I don't really quite have enough to justify it, though. Today seems just like a really messy day. I think it's a combination of, we're at a significant area. We're right around, hovering around the 30,000, 33,000 even. It broke below it, so now there's, from a quarters theory perspective, the theory would be, okay, you're under 33,000 now. Now your target is going to be 32,750, which I'm paying attention to that too. But when I see divergence, it's on a small time frame. It's on a 15-minute time frame, so I'm not going to put that much weight to it. And it's not even the cleanest divergence that I've ever seen. And it's not even really followed by any candle formation that confirms it. No, not really seeing an obvious double bottom. I mean, you have to really kind of squint to justify things like this as a double bottom, or even a triple bottom with these things. And it's all being done on a small time frame, so I'm not giving it too much weight. If you zoom out onto a 30-minute time frame, it's a little bit of a cleaner picture. Still nothing compelling to make me want to go counter trend and push this all the way back up long, considering that there was some serious resistance over here right around the 200. So there isn't even a clear path to 250. There is some resistance around the 200. And you can maybe even argue the 175. So maybe take the 925 to 175. You can clear 250 that way. In which case you should have already been in, right? If we're going to play it like that, just hyper aggressive. Still in your favor, but like, we'll see if this pans out. Right now, that's a little bit too counter trend for my taste. I don't have enough evidence to support that. So I'm going to be looking at, my bias is still for this trend to continue down to the 750. I think there's plenty of room. There's a slight worry about this area right here, considering there was such a strong move out of the 800 area. So the same thing applies to the other side. The way to scrape 250 safely would be to actually, that is one thing that I will do. Now that I've looked at it, I've kind of talked myself into it. I will take we'll have one trap out there, because just talked about how gotta have one at least, better than none. Yeah, so that's the thing. Like, one loss at least that you took a shot on is better than not taking a shot at all, because I think not taking a shot at all for too long, psychologically, for me anyway, it just creates too much of a inertia, of a resistance and it gets like, I'd rather be in a momentum of constantly putting trades out there and get into a rhythm and be like, you know what, I'm not scared. If I get into a rhythm of not trading for too long, or having no trades out there for too long, the rhythm that builds inertia is one of fear. and I'd pay the price of a couple of losses to not have that fear in mentally. So that's there's the justification for that. Now this is 32,825. So what I'm going to take here is I'm playing this area, but I'm playing it near the corner. So like if I was being super aggressive, I would front load this and I guess take the 33,000 even. But I'm going to take it a little bit safer. I'm going to play the 3375 to with the 75 points stop, and I'm aiming this at the 825. Okay. Now at the 825, if it there's a high chance that it never goes up here. It never picks me up, and it goes to 825 first. Especially with the kind of divergence that's building, I would want to see a little bit of a stronger divergence building. But then the next trap that I'd be interested in setting is the 825 because of this area. I'll take the 750 as well. Probably it's probably going to be a back-to-back order, so 825 to 750, and I'll probably not do. Well, 675 doesn't look too bad either with this area. But all of that kind of depends on what the candles, how the candles print over the next rest of the day, and then over the Globex session going into tomorrow. So that's it for today. Shortened week this week, so but that doesn't really affect me that much. So I'm just going to be looking for the price to either break above this range or below this range. If it breaks above, I'll take I'm going to be anticipating the entry on the 75, and then if it breaks below, I'll probably move this down and play the 33,000 even to push it down even more. If it pushes down very quickly and hits the 825 with more of a bullish divergence built up, then I might consider actually taking this 825 or 750, leaving a trap there to push counter trend just to scrape up a big quarter, 825 to 75 or 33.75 or 750 to the even 3,000. That's it.